Hello and welcome. You're watching the first edition of the Mutual Fund Show here on Business Today TV. I'm Sakshi Batra, and joining me on the show is my colleague, Mr. Shailendra Bhatnagar. He's the Chief Analyst and Editor for Markets at Business Today TV. Shail, very good morning to you, and thank you so much for taking the time out for this edition. Well, remember the first half of the calendar year 2023 is done, and we are seeing that the markets have been soaring continuously at all-time high levels. We did see that 19,000 landmark level getting touched on the last trading session of the first half of calendar year. But before we understand more about, what do the markets have in store for us in the second half of the calendar year, how have the mutual funds really performed so far in the first half, and what's the outlook over there? Shail, let me begin by understanding from you, for all the benefit of our larger audience right there, what is it that the viewers can really expect from this show, and why, if mutual funds is what they really wish to understand more, begin their journey with, this show can really help ease their journey, help them take right decisions?
Thank you, Sakshi, for having me over. Let's begin with the basics. We have seen record highs in two major indices, which is the Nifty and the Bank Nifty fairly recently. And before that, there has been a very sharp rally in consumption themes such as autos and FMCG. So the mood is on the right side of a very strong bull market in India in the second half. And things should only improve from here on, of course, given the right corrective levels that the market will also go down to, for the following reasons. We have very strong foreign institutional investor interest coming back into the markets in the last quarter. In the past 3 months, more than 1 lakh crores worth of Indian equities have been purchased, which is the highest in 9 quarters. You've seen a very high level of retail investor interest coming back in IPOs, some of them getting
Yeah.
oversubscribed by 100 times.
Yes.
There is a very, very strong undercurrent in mutual fund inflows via the monthly SIP route, some of them topping about 14, 15,000 rupees,
Yes.
1,000 crores a year, a month. And all that is doing phenomenally well to sentiment. So I presume that we are going to see very good days ahead in Indian markets, of course, with some corrections till Diwali. And this is
Yeah.
a rally that retail and existing and newer investors should take part in via the mutual fund route. It's safer, it's easier, it's the best to do to get into this bull market in the easiest possible way, Sakshi.
All right, thanks a lot, Shell, for setting that context right for all our viewers right there. Now, let's begin by understanding, how have the markets really performed? Both India and the US markets performed in the first half of the calendar year 2023. And therefore, where do the mutual funds really stand? So, if you could begin by helping us with the figures as to how the markets have performed vis-a-vis the US markets, domestic markets and US markets, and how does one really navigate markets at these record levels now?
Okay, Sakshi, the best way to navigate markets is to remain invested in them for the long term. Don't time the market, just be in the market in the longest possible method and let compounding do the magic. You'd see some interesting data that's coming in front of you. The year to date return, which is the calendar half year, we are seeing from 31st December to June 30th. Nifty is up 6%, back Nifty 4.1. When you compare it with overseas markets, you've seen the Nifty and Bank Nifty beating the Dow Jones Index, but the US markets have been on a spectacular rally. We've seen the SPX 500, their largest, most well-tracked index, giving a 16% return, and the tech-heavy Nasdaq 100 share index has surged about 32%. We'll get to these and how to trap these returns in Indian markets, but it's been a fantastic, fantastic ride. If you see from the lows of March 31st, when there was a pause in the interest rate cycle by the Reserve Bank of India, the Nifty is up 2,000 points, Sakshi, to a fresh high,
Yeah.
19,300. And the Bank Nifty has rallied 4,500 points to about 45,000 in the last 2, 3 months. So spectacular returns have come in, and these things are only going to get better. And the best way to ride this rally is to remain invested in quality mutual funds, do a good SIP, or buy good quality mutual funds even now.
Okay, so how have the mutual funds really performed at large in the first half? You did point out that, we've seen spectacular inflows via systematic investment plans, 14,700 crores being seen as a last edition. So, we are inching towards monthly inflows of 15,000 crore rupees. It does show the increased confidence of the retail investors in the equity markets as well. Just 2 years back, this SIP flow number was less than even 9,000 odd crore rupees. So remarkable jump there. We've seen newer participants coming in, record, opening of demat accounts as well. So, mutual funds at large, how have they performed in the first half?
So, Sakshi, I think the best performing category has been Flexicap funds, and we are going to start discussing them in a little while from now.
Yeah.
Mutual funds, a large majority of them, the quality ones with 4-star, 5-star rating, have outperformed major indices, which is the Nifty or the NSE 100 index, the 200 index, the Nifty 500. And that's simply because fund managers have been agile. They've invested the faith that retail investors have shown in such large measure, as you were pointing out. The monthly SIP inflows are now topping 15,000 crore rupees a month. All that money has gone into buying Indian equities, and that has prompted foreign institutional investors to come back into the market. So, like I've always said, don't time the market, remain invested in the market for the longest possible time, put in a good SIP, increase your SIPs every year, choose good funds, invest for the long term, and ride this wonderful Indian tiger that is going to get stronger, bigger, more agile, and more strength from now on. Sakshi.
Right. Do not sell. Do not think of selling at this point in time. That's perhaps the fine print that one should definitely read on from here, because a lot of investors would be tempted at this point, Shell, that, we are at record levels. We've seen this remarkable move. Let me book out. Let me just exit the markets at this point in time. So very, very well pointed out that one must stay invested. That is the key to really benefit from the compounding effect that mutual funds have for you. So let's now come to the Flexicap category, which you did say that is the best performer in the first half of the calendar year. Now, first, help all of viewers understand, why do Flexicap funds really make sense, especially if somebody is a new investor, wants to just start off by investing in the mutual funds journey?
So, Sakshi, that's a wonderful question. And let me just take the bull by its horns figuratively. Uh, if you're a new investor, then a FlexiCap fund, a single fund in your portfolio is a must. You've seen few names that are going on the screen,
Yeah.
and those are the top quality ones that I could find out in the FlexiCap space. Choose any one. The reason why a FlexiCap fund is an essential fundamental building block to your mutual fund portfolio are two or three. The most primary one is that the fund manager can invest in any market capitalization category, provided he gets the best share or the best company that he can hold on to. His
Okay.
hands are not tied. Not only that, he can invest in overseas markets also to benefit local shareholders or unit holders of his FlexiCap fund. So
Okay.
the flexibility that the fund manager has at his or her disposal is phenomenal when it comes to FlexiCap funds. Not only can they buy across market capitalizations, which means small cap, large cap, mid cap, they can buy across geographies, Sakshi.
Yeah.
So if you see the first graphic that we showed, where the Nasdaq and the SP 500 were risen 32% and 16% in the year-to-date returns, a lot of flexi-cap funds have very quality stocks like Amazon, like Microsoft, like Google, like
Yeah.
Facebook, like Nvidia, which have given stellar returns over the last 6 months on the Nasdaq. And Indian shareholders or Indian unit holders of that fund have really, really ridden the tiger and enjoyed fantastic returns. I'm sure our PCR team is showing you a 1 year and 6 month return of Parag Parikh Flexi Cap Fund.
Yeah.
17% up in the last 6 months, handsomely beating the S&P 500, the Dow, and the Bank Nifty and the Nifty. and the year-to-date return, the one-year return is 27%. You've done
Yeah.
nothing, Sakshi. Just bought the fund, put in an SIP, and enjoyed this fantastic rally. So SIPs make sense, and a Flexicap fund amongst the top five that are there in front of your screen. You should at least have one of them in your portfolio. Choose the direct route, choose
Hmm.
the growth option, go directly to the AMC's website and choose one of these funds, put in an SIP, Sakshi, in a FlexiCap fund. They are the best bet in India for the moment to ride this phenomenal rally that we are seeing unfolding in front of us.
Okay, so flexibility is key, and that is what has really led to the outperformance of these funds in the first half of the calendar year. And at least one of the flexi cap fund really makes sense for your own portfolio to get that extra edge that you can, apart from investing in a large cap or a blue chip fund. And if you have already index funds as well, flexi cap fund is something that you should definitely look at. We've seen these names flashing on your screens and the remarkable returns that you've seen on a year-to-date basis for most of them. Parag Parikh really topping the charts right there. I remember for a long time there was no movement over here. There were several concerns after the limits were set in the US investments, for these mutual funds. And there were a lot of investors who were already feeling quite agitated by having invested in some schemes like this and not getting the benefit in the previous year. But look how things have really turned for the better in this year. So just like how Shail, you really pointed out that, staying invested and not losing confidence. If you selected the right fund for yourself, speaking to your financial advisor, what suits your portfolio, at the end of the time, you will have something to cheer about. 16.9% kind of year-to-date returns for Parag Parikh over there. You've also seen, Mirai Asset Focus that gave a return of 7%. And all of these, if you compare it with any of your small savings schemes at this point in time, these have definitely outperformed the kind of returns you've seen here, upwards of 7% odd for most of them, with Parag Parikh, of course, leading right there. The last 1 year returns, if you see, are even more handsome, about 27.3% returns coming in for Parag Parikh, and over 20% for most of them, 16.5% for Mirai Asset Focused Fund as well. Shall, could you also detail for all our viewers what are the kind of stocks these companies, these mutual fund schemes have really selected in this last 6 months, last 1 year, which has really given them that extra edge? Any particular sectors that they've banked more upon? Has it been the banks, the financial services space? Has it been more tech focused space? Because, just like how you pointed out in the initial graphic we showed to all our viewers, that NASDAQ and SPX 500 has really outperformed. So were there a mix of both traditional and the new age tech space, which these fund managers really picked for these schemes?
Sakshi, as we discussed in the earlier part of the show, there is complete flexibility at the disposal of the fund manager. And I see a variety of stocks in all these funds from different market capitalizations. For instance, a very famous fund has Apple. They
Yeah.
have Amazon, Microsoft. So the market capitalization of Apple is $3 trillion. It is bigger. It is bigger than the Indian market put
GDP.
together,
Yeah.
right? Microsoft, Amazon, Google, these are stocks which are larger than the Indian market itself. So there is one side of market capitalization that way. A lot of such funds have a sprinkling of financials, NBFCs, for two reasons: because these two form the highest weightage in our index, which is the Nifty, about 38%. So you see the likes of HDFC Bank, ICICI Bank, Axis, State Bank of India.
Yeah.
Then you see, top holdings like ITC, like Hindustan Unilever, stocks like ABB. So the fund manager has complete discretion to buy the best possible stock that is going to outperform in the medium and the long term and the short term for his unit holder. Uh, I can't even begin to tell you the kind of flexibility that the unit holder enjoys. And if you see the returns from Parag Parikh Flexicap fund, this is a 10-year-old fund.
Yeah.
Uh, 6 months, 17%, 1 year, 27%.
Hmm.
If you think this is a flash in the pan, uh, the 10-year CAGR return is 19% a year. If you
Wow.
divide 72 by 19,
Hmm.
that gives you the compounding rate, which means your money is doubling in 3 years and 8 months.
Wow.
Nobody has seen that kind of performance in the recent past.
Hmm.
And that's the reason why money should be deployed, some amount of money in a Flexicap fund. The net asset value of Parag Parikh Flexicap fund is 59. It was
Hmm.
launched 10 years ago. So
Hmm.
your money has grown 6 times in 10 years, Sakshi, by doing
Yeah.
nothing, by just
Wow.
investing, by putting in an SIP,
Hmm.
and just sleeping over the investment. Let the fund manager do all the headache. Let
Right.
him choose whether US markets make sense, whether Chinese markets make sense, whether
Yeah.
European markets make sense. Does it, where do you want to invest in HDFC Bank or ICICI Bank? Do you want to
Right.
invest in Sun Unilever or ITC? Leave the job to him.
Yeah.
You just invest every month, do a systematic plan, save, invest, and prosper by putting in money in quality funds. Forget about new highs, forget about new lows. Just remain invested in the market, Sakshi.
That's wonderful, Shell. And I'm sure that the most asked question to you outside of this office and outside of the show has been whether it is online or offline, which is the stock that I should bet on. Instead of just focusing on a particular stock, if you just listen to Shell right here, that choose the right fund for yourself and let the fund manager do the job that you are wanting to take on yourself. That would be like more added on pressure. You need to select. Let the best of the best fund managers out there who have the experience for years really select the best stocks for your own funds, and you will see, and you're looking at the kind of returns. People say that it's not easy to make money in equities, it is very difficult, but look at the kind of returns we are looking at over here. 3.5, 4 years, doubling of your money, and 6 times the kind of money growing, like you talked about Parag Parikh over the last 10 years. It's a remarkable movement. So, okay, now, right, over here, many of our viewers would now be interested that, who have not had an opportunity so far to invest in a Flexicap fund. So out of these 5, 6 that we've discussed, any particular top bets that you would want to share with all our viewers going forward from here? How do they select out of these, which is the fund that they should go for?
So, Sakshi, pick anyone. Any, mini, miny, mo. Any, any one of the five that are there on the screen are excellent examples of good long-term fund management
Yeah.
and wealth creation.
Hmm.
So pick any one of these funds to be the FlexiCap representation in your portfolio. Do not deploy uh, more than uh, uh, more than 20-25% in a single FlexiCap fund. So
Okay.
if your total mutual fund portfolio is 1 lakh rupees,
Hmm.
then 20,000 of those rupees should be in a FlexiCap fund, and those 20,000 rupees should be invested aggressively over the next 6 months via a systematic investment plan. Sakshi, that's the
Yeah.
way forward. The reason is that there is complete flexibility available to the fund manager. I I can repeat this a million times and not get tired.
Mm-hmm.
The reason why you need to have a FlexiCap fund in your portfolio is just one: the complete leeway available to the fund manager to globally scan the universe
Sure.
and come up with the top 20, 30, 40 stocks that make sense. I've gone through the portfolios of these five funds, Sakshi, and on average, they hold between 45 to 60 stocks. Just imagine in an NAV, which is anywhere between 20 rupees to 273 rupees, you get top 50 globally top performing companies. Remember that. And all you have to do is ensure you put in a good SIP, ensure that you make money each month, and ensure that every year you increase your SIP by the amount you have got in your salary increment. That is
Okay.
the secret to long term wealth and remain invested, Sakshi.
Okay, so not just remain invested, but ensure that on a year-on-year basis, as in when your money grows, your income grows, you also invest a little bit more, add on to your SIPs, and increase the amount of SIPs that goes from your own banks every month, in a disciplined fashion, so that you continue to reap the benefits of that in the markets as well. Wonderfully put there, Shail. Let's also discuss the taxation aspect. A lot of investors are always worried about as to, what is the kind of tax that will they have to incur, on the mutual funds that they invest in. So, Shail, is it similar to what the stock markets have, or is it different from the stock markets? We do discuss the long-term and the short-term capital gains tax that they have to, incur. So, in the Flexicap space and in the mutual fund space, what is the taxation aspect that they must remember?
So, Sakshi, one thing is for there, we always recommend buying into flexicap funds uh, with a investment horizon of 5 years or more. That is it when you see the beauty of compounding. That is when you see money growing substantially. And that is when you see the magic of higher aspirational growth in India coming into the benefit of a normal shareholder. But as it may, there are only two things which are the absolute truth in life. One is death, and the other is taxes. So let's touch upon taxes. If you hold any flexicap unit or any equity diversified fund unit for less than a year,
Okay.
that means you buy today and sell in less than 365 days, then your entire gain, whatever it is taxed at 15%. If you hold on for a longer period of time, let's say 3 years, 4 years, 5 years, and if you're really lucky, 10 years, 20 years, right? Then gains up to 1 lakh rupees are tax exempt,
Okay.
which means suppose your investment was 5 lakh rupees and you made a profit of 10 lakh rupees, right? So total amount that you withdraw was 15 lakh rupees. So 1 lakh rupee is tax free for your staying power. On the remaining 9 lakh rupees, you will be taxed only at 9 10%, which
Hmm.
means that you will pay 90,000 as tax. So the longer you hold, the better the compounding works and the lesser percentage of tax that you pay, Sakshi. Believe me, tax planning is as much a critical component of long term wealth creation as is choosing the right fund,
Hmm.
putting in money for the longer term,
Hmm.
putting in an SIP, and remaining invested. Sakshi.
Absolutely. Well, wonderfully put there, Shal. Thanks a lot for, sharing with all our viewers such wonderful insights about how does one really take that one step and why FlexiCap funds really make sense. You've seen the kind of returns we've made there. Shell has also detailed the reasons for you why you must pick a FlexiCap fund for your own portfolio. Remain invested. That is the key for long term. That is also essential, and it makes sense both compounding wise as well, the kind of money that you will be reaping in after a long term period when you have that much of a horizon, and also on the taxation aspect as well. So both things combined, you stand on a win-win situation if you stay invested in the markets for long, and you also get to pay lesser tax. The percentage works out that way. Well, many thanks, Shell, for being with us, and we will continue to get more interesting aspects, more interesting data points from the world of mutual funds for all our viewers. So do stay tuned on to Business Today TV for a lot more. And don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. That's Facebook, Twitter, LinkedIn, and Instagram. Until then, many thanks for tuning in.
We're at the Business Today Tech Today Congress, and I'm joined by Mr. Mahan Kali Srinivas Rao of T Hub. Thank you so much, sir, for joining us today. I'd like to start by asking what we're going through in the startup ecosystem is